Hello everybody and welcome to the Cyclical Investors Club YouTube channel. My name is Corey Kramer. Today I'm going to be sharing 3 important lessons for investors from Tesla's stock price decline. I've covered Tesla a few times on the channel. I'm going to go over some of that and use those as examples of what investors can do to kind of avoid the big drawdowns that Tesla investors are experiencing right now. As always, this is not individual investing advice. This is just how I analyze and think about stocks. I'll probably put this video in my playlist of investing case studies, okay? So with that, let's get into kind of these lessons. The first one is you really want to have some kind of broad understanding of the odds that your thesis is going to play out, or that the market's thesis is going to play out over time. So when I first made a video or wrote on Tesla for the first time, I actually made a video on the YouTube channel back in 2021, and it came out on, let's see, January 31st, 2021. So right in here, that's as close as I can get on the 29th. And I made the case that if we shrink this down, actually, let's go to here. Yeah, that captures 2021, and we don't really need all this stuff before, say, 2019. Okay. So when I was doing that, these earnings expectations were actually much higher than they turned out to be, and basically earnings have disappointed ever since then. I don't think they've exceeded expectations. If they did, it was just this first year, and then the next year, then they stopped doing that. So if I recall, they were promising 20% growth or something for a long time. Maybe it was more than that. I don't know. It was kind of crazy, like you knew it wasn't going to happen. But so this article came out right here. The PE ratio was 305, which is high, but you can see the earnings were coming off basically no earnings, so they were growing quite fast. So the next year they grew 203%, and so then the PE had shrank in half basically, right? So you had this fast earnings growth. But what I tried to show in that video was even if you took pretty generous assumptions, I went forward a couple years and I said, look, what if everybody gets all this fast growth correct for a couple years, and then Tesla grows at 20% after that? The numbers still really didn't work out. And that was assuming that it wasn't a cyclical business. That was assuming that everything that they were promising was going to become true. And so that video was basically a sell video. I think I said buy Meta instead at that time, if I remember correctly. They might have been in the same video. For a while, I put 3 stocks in the same video, and then I started separating them out, and they would just come out on the same date. But so I don't remember if I had changed that structure or not yet. But I thought Meta was better for those reasons, and that even if the most optimistic value. So you really have to have a broad understanding of how difficult it is to grow a company at 20% even for 10 years. It's very hard, and it's really hard to do it for 15 or 20 years. I mean, very rare to be able to do that. So if a business is being priced for faster growth than that over time, you really have to understand that the odds are not on your favor. So that's the main thing that I want to say. I mean, there are examples every now and then where companies can do that, but they're extremely rare. So what I like to always have is have the odds always on my side for the most part. If there's an 80% chance that Tesla loses money if you bought it back here over the medium-term time frame, which we'll talk about in a second, then that's probably a time to be selling rather than buying, right? And it's okay every now and then to place a bet or two against the odds if you feel really confident in it, and if it really makes a lot of sense and you think it's really an exception to the rule. But at the portfolio level, you want to make sure that those type of investments are similar to the odds that they'll You don't want a portfolio full of really, bets you're going to have to get really lucky on, basically. But a couple positions where you feel pretty confident that it really is different than average. And maybe there were Tesla investors, I'm certain there were, that thought that, right? But for me, once the odds get really extreme, then it just becomes easier and easier to not, to avoid something like that. So that was my first Tesla video. So I want to take a look at, so this stock has the closing price of 175 right now. It is actually at, after today's deliveries disappointment, if I can get the CNBC page to load, it's actually at 164, 165 right now. So it's down 6% more than up here. This will be the closing price. So tonight this will change on the fast graph to whatever it closes at. So with that in mind, whatever I show here, the price is actually going to be about 5 or 6% lower. So it was about there when that video came out. So we'll call it in between 35 and 40% lower than when that kind of valuation warning video came out. So the next important thing that I want to point out is fundamentals like this take time to play out. So you really are usually working with a medium-term time frame of 2 to 5 years. Sometimes if it's a stock that, now obviously recessions will speed any downside up, right? So there's some caveats there. And the other caveat would be there are some kind of long-term stalwart type businesses that have just collected investors, buy and hold investors over the years, where 5 years might not be enough. Like they might be weak over 5 years, but they might not actually decline much. They might just stagnate for a long time, especially the stable earners. I think probably like Nike is maybe one that I recently made a video of. Disney for a while. So there's some of these that don't always have the immediate, even medium-term reaction. It's more of just they just stop growing while inflation's still going up and the rest of the market's going higher on average, and they just kind of go nowhere. So there were definitely those type of businesses too, but they are unlikely to produce really good returns over the medium term, which is ultimately what you want once you don't lose money, like once you buy something that's not going to lose money. But what I want to show is that over the short term, the fundamentals don't really determine like the stock price very much. Like they don't correlate very much. So the first 8 months or so after I made that video, Tesla's stock price went up over 50%, right? So the immediate reaction had nothing to do with the ultimate failure to grow at the rate that they wanted to do. All right. And that this happened again. So I'm going to also point to, I wrote an article for Seeking Alpha just almost a year ago. It was April 25th, 2023. So the stock had fallen and it was down in this little dip here, right in this area here, about 165 or so, which is right where the stock trades today. So it's flat basically. For the past year. Only it wasn't flat. So this article, I warned about Tesla's cyclicality because it had become clear that, now it wasn't totally clear when I made this article whether Tesla would be cyclical or not. They were making the case that they were not, that they were just going to be all secular growth, grow, never have a downturn. That was the thing that was being put out to investors, and that was the way the earnings were behaving during this boom period. But we could see by this time that earnings actually had started, earnings expectations had failed, and earnings were falling. Earnings growth was falling. So by then, there was clear evidence that Tesla was going to be a cyclical business. And even Elon Musk, which I pointed out, was comparing himself to Ford, right? Was comparing Tesla to Ford, was comparing it to other car manufacturers. So the whole narrative that it wasn't a car manufacturer is kind of weird when you're comparing your business, when one, you make cars, and two, you're comparing it to the other competitors that are also making cars, right? And we know that those have a long history of being cyclical. So we know GM went bankrupt, but we can look at Ford because they They have a longer history. Everybody corrected me when I said that I talked about a bailout during the GFC here, and they were like, Ford didn't take a bailout. Well, that's true. They didn't take a bailout, other than just the general countrywide bailout for everybody. So they survived, but you can look at their earnings during this time period. I mean, they were deeply negative. They were losing money. And if you go back in time, you would see other periods where this happened. They were in the middle of another down cycle here. And if you go back in time, even Peter Lynch was writing about the cyclicality in the 1990s. Ford typically loses 80%. Ford stock typically loses 80% during like a recession, like a normal to bad recession. So that's just normal for them. And you can see that you can't really do much of an earnings valuation when earnings are wildly fluctuating, right? So my point was with Tesla that it was really susceptible to this type of cyclical downturn. And we already saw evidence of it here. If we go back to Ford real quick, so we see Tesla's earnings fell nearly 25%. I don't think Ford's they may not have even fallen yet. They're just now starting to. So last year they didn't fall. Ford grew 7%. And this year they are expected to fall. The next couple of years they're now expected to fall too, which is what we would expect for a cyclical business. But Tesla's was even more cyclical, right? So, and we saw that evidence a whole year sooner from this bust coming off the stimulus boom. So that's the second thing. You really want to understand whether a business is cyclical or not, because, I mean, the amount of people were expecting these guys to make like double or triple this in 2023 and 2024. So that's the magnitude that you can be off if you don't understand that there can be these cycles that these businesses go through, especially when they're building factories all over the world. Those are like fixed costs, right? So at least a good part of it is. So those costs aren't going to go away when demand falls, right? Which is what we just saw with deliveries. So I warned people about that, and the immediate reaction, again, back to my other point, is the fundamentals can take time. It actually rose 80% in like a matter of months. So you can't really predict these short-term stock moves, and you don't want to read too much into them if you're using any kind of like fundamental-based analysis, like earnings declines. I mean, there was no real reason there wasn't a fundamental reason why the stock should have traded up to an 80 PE with falling earnings. And it looks like they're going to fall again. I'm sure this number will go down even lower after the deliveries report. So there's a lot of lessons baked in here, but the main three are: one, you want the odds to be in your favor. Okay, the medium term odds to be in your favor, because that's the second one. You want to focus on the medium term if you're using any kind of fundamental or odds-based like analysis. Now, if you're trading momentum or whatever, that's a totally different thing. But that's not really like investing. That's just short-term trading. And so you need to focus a couple years out. It can take, I mean, this only took a year and a half. But sometimes if there's not a recession and you're looking at an expensive stock or a stock that has potential downside, usually 2 years to up to 5 years sometimes. It can be how long it takes, but you still don't really, I mean, I don't want to be holding one of these stocks that's just waiting to fall at some point, like Tesla's doing. So basically, other than people that bought this in the fall and early 2020, actually the winter, we'll call it December for about a month and a half, basically, in December 2022 and January 2023. For investors that didn't buy the stock at that particular time, they are all underwater now since over the past 3.5 years, at least since December of 2020. So other than that little blip, everybody that bought during this time and still holding the stock is negative pretty much. So not only has your investment not gone anywhere really, or maybe is down a little bit, but the market is actually up during this time. So if we look at, let's just go, what I say, about, it was about December, other than that little blip we had. So December 2020. So we'll just go here. It was right about there. So Tesla stock is flat during this time, and the S&P 500 is up about 50% with dividends. So that's a lot of underperformance, right? And that's the type of thing that you don't want as an investor. So the last thing of the three is the cyclicality. You really want to know if the industry is typically cyclical, because we haven't had a real recession where Tesla's had to go through it yet to really know if they're cyclical. We haven't had a credit cycle yet with Tesla because of all the stimulus from the pandemic. It was very unusual. So I like to go look and see what the actual historical data says, because that's very predictive of the future. Like I said, like 80% of the time, that if you control for just a few other variables, history is going to repeat itself. Businesses are like algorithms that change a little bit. They have, if you think of like Coca-Cola or anything else, they have a process where they make this drink and people like to buy it, and then after they drink one, then they just repeat that process and they advertise and they distribute, and they do that over and over again. It's repeatable with small changes along the way. And that's how they get these stable 100 years worth of earnings, right? So you can go back in history, and even though there's changes that are obviously being made that you can account for sometimes, the default should really always be to get that historical evidence to have the confidence. So even though we couldn't look at Tesla historically, we can look at other automakers and get a feel that, yeah, they're probably cyclical. They're expensive things. When interest rates go up, people can't afford them. I mean, it's basic credit fundamentals, right? So, you want to lean on the things that have the odds in your favor. Okay, I think that's it. Oh, I did have another, I take that back. I did have another video that I put out in October of last year, which was right around here, where I basically pointed out the cyclicality issue that we're seeing now. So, and the stock is, down a little bit since then because we're seeing it play out more and more. But so I've tried to warn people as much as I can about this without getting into really deep debates. I mean, they're really unnecessary for the most part. In terms of maybe when to buy Tesla, because we don't have historical data to know how cyclical electric car business might be, it's one of those situations where you probably want to rely on technicals at some point, or you want to see the things like those delivery numbers. You want to see a couple quarters where they're reaccelerating and growing again. It's possible if interest rates come down a lot, that could be enough where you could anticipate business picking up again, right? So those are maybe the main things. You want to see interest rates lower. You want to see maybe signs of like a technical bottom, either a double bottom, rising above the 200-day moving average, just simple stuff like that. And then actual, sales increasing, right, year over year, or even quarter over quarter. It depends on the seasonality. I don't know how much seasonality they have, but so that's when, okay. And you never know. There's a lot of things that can happen, so you can't really predict, but I would definitely think that the bias is still to the downside here. It's still trading at a 60 PE. That's going to get worse because this earnings number is going to get worse most likely. And we don't know how deep they'll go because we've never had any history to look at to see. So to me, the bias is still to the downside until you really see fundamental technical signs of a recovery happening. And then when that happens, we will have a historical reference we can then look back on to judge maybe when the stock gets too expensive again. Okay, hopefully that helps everybody. I do have a 25% off link, affiliate link down in the description for fast graphs, which is what I was using to show you some of the data here. If you found this video useful, hit the subscribe button. I make a video nearly every day. A lot of them are individual stock analysis, but I do also do more broad videos on investing sometimes. So give that a try, and I'll see everybody later.